Hello everyone, it's Sterling here from Day Trading Forex Live, and it is August 29th, 2014. For some reason, I'm still up at 3:07 in the morning. Generally, I don't trade the European session, but since I was up, I thought I'd take advantage of this setup that we're seeing. We come into our pre-selected manipulation point. One of those was 31.64, and we have created what we term as a one candle stop run and confirmation. So basically what's happening is that this candle is completing both criteria. This candle here broke the high probability point by over 3 pips. That initiated a stop run. And then it confirmed up. It closed above the body of the previous candle, and it closed in its upper 1/3 quadrant. Therefore, on the pullback is where I was taking the entry. So with this trade here, what I did essentially was I waited for a little bit deeper of a pullback than maybe I normally would have. And so given the fact that the low on this was 60, what I wanted was I essentially wanted no more than a 10 pip stop. And so as this thing pulled back, ended up getting an entry at 64, which is the actual manipulation point, and that allows for a 9 pip stop on this trade. Incredibly tight stop loss. I mean, if you end up with a 9 pip stop and you end up taking 30 pips on a trade, well, you're slightly over 3 to 1. You're roughly that'd be 3.3 to 1 roughly. And that's really the power of these setups. The power of these setups is not in the fact that you're going to win 100% of your trades or even 80% of your trades. I never win 80% of my trades. The power comes from the risk reward associated with these trades. And that turns a lot of traders away because traders from day one are programmed win-loss, 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 win-loss. If you look at any strategy where you go to those one-page, what I term as BS sales letters, where they're just hard pitching you a magic $49 EA, how do they get people to buy? Well, they hammer again and again win-loss, win-loss, win-loss. Win-loss sells. Win-loss is really the catalyst for that sale, and that's what unfortunately puts traders in a trap. From day one, they've been programmed to go after win-loss, and the goal is going after profit. I think that's what people forget. They have this misconception that the goal is to have an amazingly high win-loss. The goal is to make a profit. So if I were to go to you and say, would you rather win 50% of the time with a 2 to 1 risk reward or win 70% of the time with a 1 to 1 risk reward? People have to seriously think about that. But if you sit down and you do the math, if you win 50% of the time with a 2 to 1 risk reward, that is far more profitable, not just slightly more profitable. It is over time exponentially more profitable than winning 70% of the time with a 1 to 1 risk reward. The power is in the risk reward. If you can understand that and you maximize that, and here's the key, you find setups that allow you to capitalize on that risk reward, that's the real power. And so that's the power of tracking banking activity. Often these are turning points, and therefore by that very nature it's going to have a higher risk reward. So that's the key with this setup. That's the key with all of our setups, and I'll be back at the conclusion of this trade. I am going to bed with a 9 pip stop, and I'll be up at the start of the New York session to finish this trade out. So I will see you guys then, and hope you guys have a great rest. Alright guys, I'm back with the conclusion of this trade. A few days late. I wanted to do this video Friday, but I went to bed after doing the intro to this video when you guys looked at the placing of the trade. And I went to bed with a little bit of a headache. I woke up the next day. That headache had unfortunately turned into a migraine, so I was pretty sick the rest of the day. But I woke up at 8 o'clock, closed the trade out, and Friday personally was not a trading day for me. I spent the most of that day in bed. But let's cover the exit to this trade, because the exit to a trade or trade management is extremely important. We really have 4 rules that I look at when I'm going to manage a trade. I'm going to walk through them really fast here. Number 1 is something everybody uses: your stop or your limit. That's obvious. So that's number 1. Number 2, a stop run against the trade that I'm in. We use stop runs to get us into trades, but when we see the market creating a stop run against or in the opposite direction, that is a reason to close the trade out. That was the case in this, which we'll walk through here a little bit in a little bit when I go through these different rules. So that's number 2, a stop run against the trade that I'm in. Number 3 is a news item that can spike the market more than 15 pips. So if any time in the last 6 to 9 months a news item has spiked the market more than 15 pips on the initial move, when it releases the news, I'm not going to carry going into that news. You might be asking, how do I tell whether a news item has spiked the market more than 15 pips? There's a few sites you can use that are free, Forex Peace Army, forexrazor.com, that'll allow you to see it. But the one that I prefer is fasteconomicnews.com. Again, fasteconomicnews.com. It's a free resource for the calendar, at least. You click on calendar once you go to that site, and you can see each release. You click on the news item, and it'll show you that release for the last 2 years, maybe even a little bit more. You can click on each specific month's release, see the chart associated with it, and see if it has spiked the market more than 15 pips. Really good resource, especially if you use a rule like that to manage your trades, or you want to know which news you can carry into safely and which news you should be getting out ahead of. So that's the third rule that I use. Number 4 is what applied here most specifically to this trade, and that is what we term as the session change rule. So when I go from one session to the next, I either move the trade to break even or close it out. In this case, we were seeing a session change, and we were seeing a stop run against the trade that we're in. So it provided us a very precise time where it's a good point to be exiting that trade. Not a shock that what started the move down this entire fall on Friday was a stop run of the previous highs. These stop runs do not just start moves, they also stop moves and potentially give you the indication of, in this case, a reversal back down as well. Going back to what we talked about in the first part of this video, the real power of this setup is associated with the risk reward. So an entry at 64, the close here was about 26 pips up. That's where the market was at 8 o'clock, exactly at 8 o'clock. 26 pips on a 9 pip stop is 1 pip away from 3 to 1. Now if you think about that, the real power of that, what that means, you can have an extremely horrible win-loss, a win-loss that's almost not even attainable because it's so horrible, and just based on simple odds. And if you maintain a risk reward like that, you're going to be profitable. It does not mean that every trade is going to give you a scenario where you're able to do something like this and produce a 3 to 1 risk reward. That's not what the strategy is going to do every time. Sometimes we're going to need a wider stop, and therefore in this tight market we're just not going to have a 3 to 1 potential. When we go into a trade, we almost always have a 2 to 1 potential going into that trade. That's our goal, at least. We may end up with much less than that, but that's our initial goal, because if we have truly identified where smart money has entered the market, we know we're not just going to see a 5 or 10 pip run. And that's really the key. That's the key behind this setup. That's the key behind why this strategy has such a profound effect on traders who've been chasing win-loss their entire trading career, why they've been getting nowhere chasing win-loss based strategies. And when they finally go to a strategy that is hyper-focused around risk-reward, why there's such a profound change that happens. If you want to learn more about taking these higher risk-reward setups and tracking the banks, tracking the one thing that really matters in this market, which is the largest participants in the market, by sheer volume, 10 banks control nearly 80% of the market. 5 banks control just over 59%. So think about that for a second. What else is more important than tracking the largest volume contributors? If you know what they're doing, if you've just watched them seek out liquidity, then you have a very good indication for where the market's headed next. Doesn't mean you're going to win all your trades, definitely don't, but the setups that you do win produce extremely high risk reward scenarios over the course of the time. That's why the strategy is so profitable. So again, if you want to learn more, you can check out daytradingforexlive.com. Ton of information on the site, videos, articles, commentary. If you want to join our member community, our live room, our daily market reviews I provide for members, where I give you these levels every single day, where we provide, again, that live room analysis, trades when we're in the room, and further support, and our bank trading course, you can check out that on the site as well. As always, until next time, happy trading.